Hey everybody, today is Wednesday, the 24th of January, 2024. This is Brian Shannon from Alphatrends.net speaking. We had the market at another new all-time high here today. It did fade at the end of the day, but it came right down perfectly to the week-to-date anchored volume-weighted average price. It is below today's VWAP, so that just puts a very short-term cautious sign on the market. The trend is still clearly higher. We're above the rising 5-day moving average. We are, again, also above that rising week-to-date volume-weighted average price. If we lose that, I wouldn't view it as a big negative, but it's time to be a little bit more selective in your stock entries as this market is extended and to raise your stops. That's all it means. I think that breaking below here maybe would give us a little bit more caution, and if that were to happen, the way I would look for it to happen would be maybe rally up to the 2-day VWAP tomorrow, break below the week to date, and then perhaps it comes down and meets the 5-day moving average. It's not a prediction, it's a potential scenario, just an opportunity maybe to digest this recent rally we've had here. And if things get a little bit worse, then perhaps we come down to the anchor from the recent pullback low. That anchor will be rising up into this general area anyway. So it's looking like 482.5 to 483 is a likely area where it'll find buyers in the near term if we pull back that deep. The Nasdaq still well above, not well above, but still holding above the anchored volume weighted average price from the beginning of the week. As we know, we started out Monday and Tuesday with a gap and then just consolidation. This morning we gapped up, and same story here. We got a little bit ahead of ourselves maybe in this new all-time high territory, but still holding above that week-to-date volume-weighted average price, still holding above the 5-day moving average. So it's innocent until proven guilty. The dog remains the Russell 2000. This market is doing what I wanted it to do, which was to pull back down towards this 5-day moving average and the year-to-date anchor. I'm not looking to buy this market. Near term, it's below the week-to-date volume-weighted average price. The daily time frame is a mess. It's good to see it got a bounce in this area where it was supposed to at that 38.2% retracement, the 50-day moving average, and the anchor from the all-time high, but it didn't make it a low-risk entry in there, and I'm still not thrilled with Russell 2000. To me, it's all about the individual stocks, and most of the big winners are still the semiconductors, which are at an all-time high here once again, still holding above the week-to-date volume-weighted average price and showing that they are the clear leaders in this market. Stocks like NVIDIA continue to push higher. We're still long a third with a stop underneath this low right here at Alphatrends. Also long some GNK from $16.20, some Autodesk, some MNDY. These are all some good winners, but we also got stopped out today of Twilio. I thought that one maybe had a chance to get going. Back to the markets, semiconductors, as we know, that's where the strength is. Biotechs, they've pulled back to that trend line, and we still have a rising 20 and 50-day moving average. However, it got up and found some supply at the green year-to-date anchored VWAP and the purple anchored VWAP off of the high. So we're just digesting in here. We do have a rising 5-day moving average, so let's just clear some of that up so we can see it more clearly. I think this market is really more neutral than anything. It's still extended, and if we fail in this area for the biotechs, then I think that something like this is likely to occur, and it puts into play the possibility of the 50-day moving average. So I'm still not ready to get involved in these biotechs. We're getting a little bit more neutral in them, but this failure to follow through with any upside tells me it might need a little bit more time to digest. Financials, this is why I never sell short this intermediate term downtrend when the primary trend is higher. I just have nothing to do with those. Let's take a look at Ethereum and Bitcoin. Ethereum, this one is the one that I've been trading the most. I did something I don't do in equities, is I bought some yesterday at 21.90. I had a standing bid in there. That's the anchor off of this low from October. This is the daily time frame. That's a 50-day moving average. And this is a 27-week, I think, moving average. 27 times 7, whatever it was, it's 200-day moving average divided by 7 days in a week. So that's what that is. It approximates the 200-day moving average. Anyways, we're down to that anchor from here. If we fail at this level, then I'm looking for a test likely of 1975-ish. So I'm not really too concerned about the position that I have in there. It's very small. It's basically just trying to steal some Ethereum in case it gets a violent bounce. It's not looking like it's going to, so I will most likely sell that if it drops down to about 2,100 or so. And then Bitcoin is trying to hold the anchor from the beginning of the move. That is right here in October 15th. That's where we really got the move that began ahead of the ETF approvals. And of course, the ETF approvals came right at the high on that day there. So we're trying to find buyers in this area. If this level fails, then I think you have to look down at the anchor from this handoff from the low from last year. And that's what this blue line is. We can put that on the other time frame as well and put it right here so you can see it on the weekly. That would bring it down to about 39 even. So I don't see a lot of huge downside in here, but the momentum is still lower. There's really no hurry to get involved in these. As I mentioned with Ethereum, I was looking for a quick, sharp bounce. I might even sell this thing ahead of 2,100 simply because it didn't get that sharp bounce. So I don't think we have that fear-driven sell-off yet. I'm kind of neutral on these at best in the crypto space, but with the shorter term time frame still weaker, it's most likely I'm going to kick this out with a small loss or maybe even break even at that 2190 level that I mentioned I've purchased it at. So let's take a look back to the energy names. They're still in a primary downtrend. They're getting a bounce. It's a bounce and a downtrend. Bounces and downtrends are guilty until proven innocent. The pattern is lower highs and lower lows. That means the sum of the rallies is always going to be less than the sum of the declines. So why fight the trend? Why put the math against your odds? And news and surprises tend to follow the direction of the trend. So I see no reason at all to be involved in energy names.